Dark side copies all. Go ahead. Message to observer. Alpha 3 rounds. AT delay in effect. 3 guns. Bravo 2 rounds. 2 guns. Smoke on effect.
What up, crew? What up, crew? This is Options Millionaire, part 5 of my educational series, the Squeeze Momentum Indicator. A lot of people have asked me about this one over and over and over, probably the most requested indicator video that they wanted me to make. So I really wanted to go ahead and get this one knocked out early in the series. That's why I'm doing it now. Especially when people start joining my live streams for the first time, when they join the Discord for the first time, they ask me, hey, OM, what is that big nasty green and red goo at the bottom of your charts? Why does it take up so much space? Why do you use it? And I'm going to address all those questions, all those answers, and not only that is how do I tie it, not only the definitions of squeeze momentum, but how do I tie that into my system? I know, one of the tenets of my system is risk adversity, playing smart, really defining your entries and exit points, and this is one I help use over and over and over again to utilize a positive trade and build a win rate and a profitable win rate over time. So let's go ahead and get into it now. I'm going to start out with the definitions of squeeze momentum, and then we'll roll into how I actually use it. So what is the squeeze momentum indicator? So one of the reasons I like this indicator so much is because it focuses on two different variables that are both very important to day traders and long-term traders alike, and that's volatility and momentum. Two things which, if you can identify a correlation between the two, you can have an awesome entry point indication and an awesome exit point indication in the event that a trade turns against you. And that's very important to both long-term and short-term traders. And I use it for both. Right now, since my system is primarily focused on short-term traders, I'm going to focus on the short-term application of this trade. So originally, this was intended to focus primarily on that, which is the tendency for the price to break out strongly after a consolidation in the tight range, which is consolidation. And the longer that a price stays in a tight consolidation, the higher chances that it's going to break out in a volatile manner, one side or the other, up or down. And I'm really going to focus on identifying that using this indicator. So I'm going to go ahead and get into actually what the squeeze momentum is. And to do that, I'm going to expand this. And I'm currently on the SPY daily 3-minute chart. And I go back and forth between the 3-minute and 5-minute on this when I'm doing my actually analytical trades during the day. When I'm doing my pre-market analysis, I will zoom out to the 1 year and 3 month, which I will show you. But right now, we'll just stick to the 1 day, 3-minute chart. And I just expanded this so I can show you all the colors. And you can kind of see a couple of different variables about this. You've got the bright red and dark red, bright green and dark green, the black crosses here, and the gray crosses here. And I'm going to start out on the crosses. So what do the black crosses mean? The black crosses mean that you are currently in a squeeze. Now, I like to wait till there's at least 3 in a row consecutive black crosses before you identify that you're in a squeeze. Otherwise, you can get a lot of false entries, especially if there's drastic shifts in the momentum in the market, if there's high volatility. So I like to wait till there's at least 3 black crosses, which 1, 2, 3. So we're about there. And what does a squeeze actually mean? That means there's no real obvious trend upwards or downwards with buyers or sellers, that there's a strong, tight consolidation, and the buyers and sellers are duking it out. They're neck and neck. There's no real winner in that term. And the longer you are in the squeeze, the more confident I am that I'm going to have a break to one side or the other. And that's what I like to look for. Now, the gray crosses mean that the squeeze is being released. You have a release of squeeze in one direction or the other. Now, I look for the gray crosses as an entry signal on the chart. Now, like I said earlier, I like to wait for a long period of squeeze before I actually use that as an entry point. I don't want to see gray, black, because I don't like to use this for a scalp play because you usually miss entries because it is a lagging indicator. So let's go back to a good example of this, and I'm going to come back to the May 24th, which I know we had a good example of this. Now, when you release the squeeze with the gray cross, what does the gray mean, or the green mean? What does the red mean? The green means the direction of travel. The buyers have stepped in and released it upwards. The squeeze released upwards, and the red is the other way around. So let's look on the 24th, the morning of, on the 3-minute chart here. Now, you start out the day. This was a trend day. So you start out the day very strong. Right out the gate, we're released to the north. So there is no squeeze. The buyers have clearly taken over that morning. So theoretically, using this information, you could take a position here, a call, which means the squeeze is released to the north. The buyers have stepped in, and this is squeezed all the way out, and the price keeps going up and up and up and up and up. And then for me, the first time I see a dark gray candle, that means the volume momentum is starting to die down, is starting to reduce, and start entering into the squeeze. And I would close the position right about here. So that would give me, if I took it right off the bat, which would be in the morning, you would hold this all the way up, and then you would close it, the first indication of a gray candle. Now let's zoom out and see what happens actually at that first dark green candle. Right here, see, bam, right there, it correlates almost perfectly. We climb. The second we have the dark green candle, we enter the consolidation period. Now, especially with options, you do not necessarily hold the consolidation periods because that's where you start getting into decay. Theta will eat your position, especially with options. So I would definitely want to close the first sign of a consolidation or a downturn. In this case, this has worked out perfectly there. Now, I will say, I never use the squeeze momentum by itself. I always use it in conjunction with all my indicators, and that's the same with all my indicators. So if things don't look right, I'm not going to focus purely on the squeeze momentum, but theoretically, I am using this as that entry, and in this case, it worked out very, very well. Now let's go forward. So we definitely have the dark green candles here. It dies down, and we re-enter the squeeze right here, which to be expected because the momentum has died out, and now we're just in a tight consolidation range. We have black crosses, black crosses, black crosses. And then we have this little putter here of sellers takeover, and it releases to the south. I'm not taking a trade here on the south because this is a trend day. I never fight the trend, and I'm still waiting. And it enters back into the squeeze, and we have another firing here with this big green candle, and you could take that position. But once again, now you're playing more of a chop fest because you have these altering dark and green candles instead of this nice smooth momentum. And I don't want to play this indicator for this stuff because you might miss an entry because it is delayed indicator. Now let's look at it the other way around. Now that we've looked at a green day, I want to look at a red day and a little bit more volatile day that kind of balances between a trend and a range day and how you can get a false indication from this trade. Now, this goes over why you should not use the squeeze momentum indicator just primarily as your own indicator. You want to use it in conjunction with your other indicators. So here, we start out the day, we consolidate here for about 10, 12 minutes, and then boom, we get this huge downside. Now the squeeze momentum does a good job of giving you a decent indication here on the 3-minute chart, which would make you enter about right here, roughly depending on how quick you were to enter that trade. Came down. Now here's where it gets a little iffy because you consolidate here for, let's see, about 30 minutes. We consolidated, which, you know, in the options world, you're going to fight decay when you start consolidating. Your premiums might go down a little bit, and then you get the downside. But it would have given you a sell indication here. And that's because you had such a volatile move so quick, it threw the momentum down. It just threw it down very quickly. It poked it out, and now you've got this consolidating period here, and the indicator did not catch up to that cooling of the momentum until right here because you had such an influx of volume so quickly. The momentum indicator lags, and it didn't catch up till here. So you'd had a great entry, but then you would have had your premiums eaten up, and then you would have given a little bit back, and you would have closed a position here. And then it goes on to get even more hairy because the squeeze momentum re-enters the squeeze, and it doesn't give you another buy indication until here. So here to here, you would have missed this whole move, and then going forward, you're holding that position, and then the first sell indication, you would have been here if you're holding a put. So you would have entered here, sold here. That's pretty much a break-even trade. It's not a good thing to have. So that's why you do have to be careful using the squeeze momentum indicator because it is lagging. Very volatile moves can make you have a delayed entry and put you in a losing position. It's very, very important to use your other indicators in conjunction with the squeeze momentum indicator. I do not like using the squeeze momentum indicator on a short-term basis in very volatile moves. You can make you miss entries. The 3 and the 5 minute is just too long for very quick volatile moves, and you can miss entries. The only time I like using volatile moves with squeeze momentum is long-term charts. So I'm going to switch out to the 1-year chart here so you can see it. It works very, very well with long-term charts. Let's go back to March 25th, which is when we started the original beast mode bull market before we entered this consolidation phase. So here we go. March 25th is when we entered this. We started this bullish indication of this little downturn. Come up, come up, come up. All right, so on the 1-year chart, we get our first buy indication here on this green candle, and it goes up. And it comes up, and it comes up, and it comes up. All right, first sell indication here. That's an awesome, awesome indication to buy and sell. Buy here, sell here. You get this nice move. That's roughly 395 up to That's about $20 with the SPY underlying stock price movement. Fantastic return for your options if you were to take one. And then it cools off. So I would exit it here, and look, you get the sideways chop for weeks now. So the squeeze momentum indicator is fantastic for long-term trades, and for shorter-term trades, volatility and range days, which is chop, do not work well. I always use this from a short-term trade on trend days. That helps me identify to grab the trend because the momentum is carrying the trend upwards. And that's just my personal use of this. I always use it in conjunction with other indicators, but normally always on trend days and never on choppy range days because you'll miss entries left and right. Anyways, guys, that's really all I got for this indicator. It's not too much. It's all based on volume and momentum, and you just have to be smart with it. You have to know how the momentum reacts. Large influxes of volume very quickly will skew the momentum indicator and give you delayed or onset entries, so you have to be careful. So going forward there, I hope you have a good understanding of how we use this indicator, and please always shoot me a message if you have any more questions. Watch my live stream because I use this a lot and I talk about it a lot, and it's a good thing to look at to show you how the momentum comes into play. I'm very heavy on volume-based indicators because I think price action and volume is the key to success. Anyway, thanks for joining here. If you're new to the channel, please subscribe so you can get further videos, indications of when I go live and when I post educational content. Please head over to the Discord, join there. There's a huge wealth of information. We have whales and minnows alike interacting, learning from each other, asking questions. Fantastic environment. Of course, you can follow us on Instagram, options.millionaire. Also on TikTok, optionsmillionaire. Cool new content coming out daily and weekly. Thank you for being here. I appreciate you taking the time to like this video. Please smash that like button, subscribe again. Thank y'all. I'm out of here. See ya.